Tell me about the SBF regulation. What's going on with the world of crypto? Aptos is now live and tradable. What are you doing? Are you holding more cash? Are you shorting? Are you going long the ecosystem as a whole right now?
For like 2 weeks now, ETH has been aggressively deflationary, where every single year there's about 1.5% less ETH than the year before.
We raised and lowered a bar of light only using our thoughts.
AI has been a bear market for 30 years. That's a dangerous world we start getting into. If people think it's 10 years out, but like it's already getting much, much closer.
So here's the billion-dollar question. Welcome back, ladies and gentlemen. We are back inside the war room with myself, Dan Jablonski, interviewing Felix Hartmann, CIO and managing partner of Hartmann Capital. It's been a crazy 2 weeks, and we have a lot to talk about today. So I want to jump right in with some stuff that's actually happened this week, and tell me about the SBF regulation and what's going on within the world of crypto.
Yeah, so as you said, crazy 2 weeks, I think. That's an overstatement. the crypto markets have been kind of like sidelined. We've had a lot of like Fed events going on, like the interest rates got raised again. Things were pretty choppy. But other than that, it's been kind of a flat market. That being said, there's been a couple news events, and the main one that captured the community's attention has been on the regulatory front. People always talk about how, regulators are coming in more and more, and they have, for example, the Tornado Cash example. So SBF, Sam Bankman-Fried, the CEO and founder of FTX, kind of took it upon himself to provide a guideline where he said like, hey, these are just my thoughts. This is what I think could be a good start of like how we could self-regulate this industry. And I did think he provided a number of like solid thoughts, but immediately he got shut down by the industry where people said, no, he's turning into a narc pretty much. He's turning into like a, an elitist kind of guy that now is like affiliating with the government who's trying to go against the very fundamental things that crypto stands for. But I think we can unpack that a little bit, because while most people read headlines and they say, oh, he's pro blacklisting addresses, which goes against an open free blockchain, I do think that the intentions are right. And that doesn't mean like I like him a lot or not, but I think he put a lot of thoughts into like how to actually make it work, because I'm a big believer that ultimately when it comes to blockchain, we either self-regulate or we don't, at which point then it got so bad that governments will force to regulate us. Because like the only reason governments usually step in is if there's so much rule violation that they say, well, you guys can't do it yourself, we'll do it for you.
Yeah, I love that. No, this is a huge thing on crypto Twitter this week, and it's something that's kind of captured the whole gravity of the ecosystem. And I know, maybe to play a little bit of devil's advocate here, but the defenders of SBF's proposal do think that regulation is a really key piece of crypto being adopted as a whole by public companies and bringing in more of like the public sector within crypto. What are your thoughts on that?
Well, I mean, obviously I think it's true, because few people probably know how much is going on behind the scenes than SBF and Brian Armstrong. And those various leaders, for those who don't know, like Brian Armstrong is the CEO and founder of Coinbase, right? And so both of them went under fire for like, kind of being pro-regulation. But I think what they know that we don't know is how ugly the other side looks like when there's none. And, to go a little bit into specifics, for example, like one of the big topics that Sam talked about in his write-up, and I definitely recommend, like, if somebody's curious about it, before somebody debates about it, they should read it, because it's not that long. You can read probably in 10 minutes or less. One of the first caveat was, blacklisting versus allow listing, right? And so he said we have three options, really. We can either allow a free-for-all where anybody can transact with anybody, right? That's kind of like how it is right now.
Yep.
Option number two is to blacklist, where you say, for example, hey, this is a bad actor. You cannot and should not interact with them, and they cannot interact with you. Yeah. And then the third option was which is the most invasive version, is allow listing, which means you can't interact with anybody unless the government gives a green light, right? And so
KYC.
Right. That's where KYC comes in, but then that really kills DeFi, where every single wallet needs to have a passport associated with it, right? And
then what's the point of DeFi then? At that point,
right. At that point, it just becomes another layer of the traditional finance, and the problem that comes with it along is that the operational burden that comes with allow listing. Because now, let's say I want to start a DeFi protocol. A year ago, it could be two 18-year-old guys, in a basement, in a garage, just coding away and launching something cool. Yep. Then it's like, oh no, we got to have a several $1 million legal budget that enables us to like verify everybody, make sure those documents are authentic, and so forth. And if there's a bad and so forth. Now, what SBF speaks for, and like he says, like, look, allow listing is kind of like the death of DeFi, so let's not do that. A free for all sounds idealistic, sounds utopian, but probably won't be happening, right? And so what's the middle ground? The middle ground is blacklisting, where he says, well, if somebody is a bad actor, right, that DeFi protocols and exchanges and so forth have the responsibility to blacklist.
Yeah.
So, but the important part that he pushes that I think most people didn't read, that kind of skipped over, is maybe two things. One, it should be real time, right? So and I do take issue too with, if this happens, let's say a year later. So let's say somebody hacked something, and then a year later the government says, like OFAC says, any wallet that money is touched is now sanctioned. Yeah. Well, that's stupid because like at the time nobody knew, right? It's like maybe you bought something, you sold something, you received money, you thought you're fine, and then a year later you found out actually that money came from a terrorist. And like, well, I didn't know. You didn't tell me, and now I'm blocked. Yeah. That's stupid. So he says it needs to be real time. Yeah. Where real time the DeFi protocols get told, hey, you need to block this user, right? Or maybe I'm about to, let's say, buy a laptop online and I'm going to send somebody money, and this is, hold up. This is a sanctioned wallet. Yeah. You show you and proceed. If you proceed, you will be blacklisted, right? And so now people know. Now it's kind of safe, right? And then the second part says that you have the ability to cure yourself, right? So that, for example, because what happened after the Tornado Cash incident is that people started doing dusting attacks, which is sending tiny amounts. Like they send like, let's say $2 to Ryan Gosling, $2 to Jimmy Fallon, $2 to Steve Aoki. And all of a sudden, technically, those guys should be OFAC'd, right? Which has become a verb now. But to cure yourself, so to say, is again, all these are not regulations. These are all suggestions and ideas he brought forward, right? So the idea he brought forward is that you can cure yourself by burning the money that was sent to you. And so like maybe that is a wallet controlled by OFAC, where if the terrorist sends me, he gave the example, like the terrorist sent him $1 million, he can send that $1 million back to the OFAC controlled burner wallet, so to say, and he cures his wallet. He now is no longer flagged or blacklisted, right? Because the problem with crypto is that it's not a problem, but in this context, it's a problem that it's push only, meaning you can send money, but you have no control over who you receive from. Anybody in the world can send to you. So it's like literally not in my power to tell terrorists, don't send me money, right? Yeah. And so I think that's a solution. Like, on the face, people say, oh, but now you're introducing regulation to crypto. But ultimately, everything that you want to do, you can still do. And and I would also say that, look, I don't agree with all regulation. For example, I think accredited investor rules, they prevent a lot of people from like investing in good things. There's other rules that I think are a little bit over the border. But when it comes to OFAC, I mean, it's a really low bar, meaning you have to do some really egregious things to end up on that list. Yes. Right. And so like if we draw the line there, it's like, come on, like that's kind of like basic. Right. But of course, the maximalists will say that, look, you start drawing the line somewhere, the line will keep getting pushed and pushed and pushed. And I think there's some truth to it, but ultimately, if you want, and this goes back to your initial quote, if you want crypto to be accepted in the mainstream, you got to meet the mainstream kind of where they are. Yeah. At least a little closer.
Yeah, so some middle road I think is definitely important there. And this is a topic that has really kind of grabbed the ecosystem in the last few days. And so I wanted to start and just get this out of the way and get this first and get your take on it, because it really encompasses like everything that we want to talk about today, that we want to talk about on today's show. Again, we're going to follow the same format that we did last time. We're going to talk about macro. We're going to dial it into what you look at on the public side, and we're going to peel that back a little bit, look at what you look at on the private side, and then end with some team specific stuff and what's been going on in the last 2 weeks. So with that being said, still a crazy time in the markets. Yeah. Still.
Oh, and I can one more quote I think is important for the SBF thing. Because like he maybe brought up 5 points, and I thought maybe 3 of them are kind of like redundant, but anyway. But then the first and last I think were important, where he talks about DeFi, because he clearly represents a centralized exchange, so he has his interest there, and there's a lot of like subtext in his proposal that definitely would put FTX in a good position. But he also talked about DeFi, and it's like what is considered speech, what is considered a licensed business, and so he did push that code is speech, so like anybody should have the right to create the DeFi protocol, upload it, and it's not a security, not legally liable, and so forth. Yeah. Same thing goes for on-chain DAOs. As long as all the funds of a DAO stay on-chain, that should not be regulated. Yeah. The place where requiring licenses and so forth comes in is if they either market or host a front end, right? And so that's maybe where we got pushback, where you said, hey, like just because Aave has a front end doesn't mean they should be regulated. But ultimately, if they want to upload the code, they can. But if they want to put up a front end, pretty much like have a website and market people, that does require a license in the US if they want US customers. And so I think ultimately, like, again, people can push against it, but also at the same time, I think it is a fairly low bar that is workable, that actually doesn't kill the industry. Yes. And so I think that's the biggest thing I'm after too. And so like, even though like, the utopian me would be to say like, screw this guy, which most people did, but I can see, let's say 5 years in the future where that makes regulators happy and the show goes on as if nothing ever changed. Sure. So those are just my overall thoughts. No. But definitely recommend everybody to read on their own, form their own opinion, and happy to discuss.
diving in next, a few macro topics this week. The Prime Minister of the UK, Truss, she's out after 6 weeks in office. The British pound is also reaching a level of volatility that's now just about equal to Bitcoin.
Wow.
Also in geopolitical events, China is kind of re-engaging with talks of a potential invasion of Taiwan after President Xi was starting now his third term. So in quoted, he said, "We reserve the option of taking all measures necessary on the reunification of China. Complete reunification of our nation must be realized." So a few other things. 10-year treasuries this morning hit about 4.3%. This is the highest level since September of 2007. That really invokes a lot of unconfidence in risk assets right now across the entire market. And we all know what happened after September of 2007. So this week's thoughts on things that we've seen macro, on things that we've seen markets. I'll go first. There's not much to celebrate here at all. So what are you doing? Are you holding more cash? Are you shorting? Are you going long the ecosystem as a whole right now? Yeah, please tell me. I'm being a little too bearish.
Yeah. I talked about this on IC in our investment committee this morning. Where one of our analysts, Jonas, who also, as we discussed, loves macro, he's also bearish. And I said, he's like, we should hold more cash too. My response was that it's important to understand that even holding cash is a directional position. Yeah. Right. Because then you're essentially, you're essentially like, if you hold cash, you're long that underlying currency. Yep. Right. And I can't say I'm let's if we zoom out for a second and look at even a 2-year time horizon, over 2-year time, because like if you zoom, like the reason I like to zoom out is because that removes the need to time, right? Because maybe some people might time the perfect top of the US dollar, some people might time the perfect bottom of crypto. I'm just gonna assume that we won't perfectly nail it, so I want to avoid the worst. And so I can't confidently say that like over the next 2 years holding dollars will outperform holding crypto, right? And so I'm like, in 2 years from now, what will look the best? And if you can do that on an unlevered basis, then that's what I want to optimize for.
It's a great answer.
And here's the issue. Like the dollar has already rallied so strongly against virtually every single asset out there. It's particularly like when people look at equities and crypto, what do they say? They don't say the dollar got strong. They usually say like, oh, crypto sold off, the market crashed, everything, so on and so forth. But the US dollar is also getting extremely strong against virtually every single currency out there. And we talked about this on the last, war room. I don't want to get too intense on it, but the bottom line is that we've already announced kind of like how high interest rates are going to go. Yeah. Chances are those targets will be respected. Maybe they push it a little bit higher. I believe, maybe it's like to 5.5 or so. And if that's the case, at some point money will rotate back into crypto, and not just crypto, into any kind of asset. And so I'm just like, I'm going at from the angle of finding fair market value based on current fundamentals. And this goes from both angles, both the long and the short. And so my favorite way to manage risk in a time like this is to short the things that are just fundamentally overvalued. And that's a truth too. Like at this current time, I have a hard time finding high conviction longs. There's very few of them, but occasionally they happen. I don't have a hard time finding high conviction shorts. Yeah. But would I do shorts naked, so to say? Like would I short something without covering my beta? Because ultimately that's what people also mess up, right? The market is down 80 to 95% depending on what asset you look at, at least in crypto. If you look at equities, let's call it 60 plus. And so yes, you can say, look, I think, for example, like real time, like I believe like Axie is overvalued at $3 billion, right? I could directly short. Now the problem is if all of a sudden the dollar weakens and we get a little bit of a rally where like, just beta is bullish, Axie can very much go from $9 back to $13, right? In which case the short gets squeezed and I get in trouble, right? But I do believe that if I zoom out and say, hey, over 18 months, right? I do believe that over 18 months, Ethereum is undervalued, and Ethereum could easily rebound I'm not saying all-time highs, but let's say to the 2000s, which would be a double. And at the same time, I can also see that Axie, which when we first started shorting it was $16 or $18, and now it's $9. So we already made a lot of money on it shorting Axie, but I believe it's still overvalued. It's still $3 billion. It could still go to, hey, it could drop 66% and still be $1 billion game, which is aggressive, right? Over 18 months, I could see Axie going to $3, right? And so now, with this long short setup, I would have, on one hand, in an ideal case scenario, I make twice on my long. I make, let's say, 66% on my short. But let's say even in a volatile environment, market crashes tomorrow, and Ethereum goes down to $800. So let's say Ethereum wipes out 33% of its value, assuming it was at 1,020, it's a little bit higher. But let's say Ethereum wipes out 33%. In the environment where Ethereum loses 33, I would bet that Axie loses at least 50, 60%. And so now not only do I cover the risk of my long, but I'm either also covering the risk of my collateral or I'm even making money, right? And so that's kind of like been our structure for like the last 4 or so months. And the irony is that, for example, like in a month like this, Ethereum dropped 2%. And Axie dropped, I think we have it somewhere here, Axie dropped
26%.
26%. GMT dropped 23%. Sandbox dropped 12%. Ape turned 22%. Like, and this isn't like 5 versus 10%. This is 2 versus 20. This is a fact of 10x more downside. And so, that just kind of goes to highlight, I believe 2019, like if we just look at crypto in isolation as the market, I think is in a return dispersion year. Blue chips will likely, I think, have found their floor. And there's a lot of stuff that's just wildly overvalued, which is largely also based on like how tokenomic flows wise they were structured, where they had super tiny flow that made it look like they were cheap, but they really weren't. And VCs sit on billions of dollars. And then on the flip side, from the macro perspective, I literally don't believe any side has an edge. Like, let's like if we're just like intellectual, I think nobody knows. I talk to really smart, people, but both institutional asset managers, family offices, and some say, we discussed this, last time, we're like, some think a Lehman moment, some think, maybe at least another 30% downside, and then others think this is the perfect bottom. We're buying hard here, right? And so, if it was more lopsided, I would be concerned one way or the other. Because if everybody's super bullish, that's actually bearish. If everybody's super bearish, that's actually bullish. But we're still fairly split, and so I just think that's the cleanest way, the most risk-adjusted way to play markets, and I think that's even beyond crypto itself.
No, I agree. And just to further that and put one point behind that, you and I had conversations with prospective investors this week, and that was their biggest concern as well too, is how are we hedging our downside right now, and what are we doing? And I think that's a great answer, because in this time, we don't really know what the right approach is, but perhaps maybe the right approach is as you had mentioned before, is looking to DCA into a strategy over the next 6 to 12 months. And instead of catching a falling knife, look to make placed bets during certain timelines of this market.
It's fun. Unfortunately, what people always kind of like life and death when it comes to investments, and goes in both directions. They're either all in or all out, and that can be in an investment, as a portfolio overall. Like, I feel like I see more 80% cash or 80% in versus, let's say, 50-50. The kind of like the middle of the bell curve is like, it's inverted. Like, most people are either all in or all out, which neither makes too much sense, but it makes sense. Why? Because people generally have some form of thesis, some form of conviction. I think the market's going to go up there. I think the market's going down. And if they don't know, a lot of times people opt for whatever they were in before. Meaning, if they were bearish and they're in cash and they're uncertain, they'll stay in cash. If they were long before and they're uncertain, they'll stay long, because there's a certain there's a tendency toward, I guess there's path dependency from the perspective that, just the same way, like if you're it's this really funny anecdote, but like from a marketing perspective, if somebody signs up for an account and the checkbox for net newsletters is already checked, the 80% of the time they leave it on. If it's unchecked, only 20% of the time they click it, right? So whatever's already done, they'll do. So if somebody's already long, they'll probably stay long. But that's super important as an allocator too, to essentially challenge that mindset and say, like, if you're long, every single day you should approach from the perspective as if you were flat, as if you were in cash. So, and that's something I say too with our concentration rules, like, if I wouldn't buy again today, I shouldn't hold.
Yeah, that's a really good point.
Because it kind of forces you to take the opposite mindset, so to say. But no, like I said earlier, when it comes to the long side, there's not much of high conviction. And the one thing I'm very, very high conviction of, and I'm not going to beat it at horse from last in War Room, but Ethereum, since the last War Room, actually a lot has happened with Ethereum too. We're now sitting at, the merge happened on September 15th. And so since September 15th, only 1,700 ETH have been issued. And it's actually more important from the perspective that on October 8th, the real deflation started. And so on October 8th, there were 13,000 ETH issued since September 15th. Okay, so like in 3 weeks, 13,000 ETH have been issued. Since then, about 12,000 have been burned.
Wow.
Which means if this trend stays on for maybe another day or two, we've officially been deflationary since the merge. We've wiped out an entire 30 days of issuance
Yeah.
just by the burn. And so like, again, since 20 days, for like 2 weeks now, ETH has been aggressively deflationary, where every single year there's about 1.5% less ETH than the year before. On top of that, the people that hold ETH and stake it, they make another 4%.
Yes.
And so if you're a staker of ETH, effectively you're experiencing a deflation of roughly 5 to 6%.
Wow.
And that's why I'm so bullish, because like, yes, the dollar is getting stronger, but every other currency is getting weaker.
Yeah.
Not everybody in the world wants to hold US dollars because it's a currency outside of their control.
Yes.
Especially like maybe their country if their country isn't exactly friendly with the US, what if there's sanctions, right? Like Russians that had US dollars got in trouble. It's like, I don't know if a Chinese person wants to hold US dollars, right? And so ergo, where do they go? They go to maybe Bitcoin, Ethereum. And now Bitcoiners will say, like, of course they'll go to Bitcoin, but the reality is there's way more you can do with Ethereum, right? If you hold Ethereum, you can use DeFi. If you hold Ethereum, you can also like use Ethereum settled stable coins and so forth. So my overarching thesis simply is that Ethereum over the next 2 years or so will become a major world asset. And last time I mentioned the main points from like deflationary, ESG friendly, and index bet on DeFi, NFTs, stable coins, and so forth. And it's just wildly underpriced when you take those fundamentals into consideration.
Awesome. Thank you. No, you definitely answered my question. That's what investors had on their minds this week. And I think as well too, going back to what you had said about the shorts that we have on, the falling in Ape, in Sandbox, in GMT, and Axie. One thing that I do want to mention, 9% of the Axie supply is set to be unlocked on October 25th. About $196 million. So what do you think the unlock will do to impact the prices?
Right. So as you said, it's a big number, $200 million. And now people can go in and assume, hey, people already hedged it ahead of time, right? Because if I'm a VC and I'm about to get, $30 million payout in Axie, and I think everybody and another 170 million of other people will get that payout. Clearly, it's the downside is protected. I'm not going to wait until the unlock day. Now, the challenge with that is that the amount of open interest is actually way lower, right? So like right now I'm on FTX. There's only about 1.9 million Axie tokens, which is, multiplied by 10 because it's about roughly $10. It's less, but there's about $19 million worth of shorting volume in total. Take us away, and then there's only like 16 left, right? And so pretty much it's just mathematically impossible that all the VCs, all the team members that are about to get paid out in a couple days are hedged, right? And so when they do get it, that again, that's an assumption, but I'm just doing pure math here where I say, look, we all can look at this and realize, look, this is a 2D browser game with a collapsing economy, collapsing like revenue numbers, user numbers, and so forth. If you were a seed investor and you, let's say, made 100x on your investment, you probably will take some of those profits. And particularly because look at the market. I mean, there's so many great opportunities now. Like if this was a year ago, people would say, well, the market has a lot of gas in the tank. This is a great momentum play. There's a great narrative, but the narrative's gone, the momentum's gone, and the market is ripe with great undervalued opportunities. And so I would say that around the next few weeks, you probably see of the 200 million, I would be shocked if it's less than 150 million returning to the market, and having 150 million of like selling pressure, even if it's spread or T-whopping over a month, that's enough to really draw it down if the market is bearish, draw it down slightly if the market is neutral, and at least really stunt growth, even if the market is bullish. Right? Because that's what we've been seeing is like, even on up months sometimes, the beautiful thing about bear markets and these overvalued projects, and I learned this like just from trading the market in 18, 19, is that on the way down, they bleed more, and on the way up, they barely recover what they had lost prior. Meanwhile, let's say something like ETH, let's just use history, for example, like in 2018, 2019, you had BNB token do really well, Chainlink do really well, Bitcoin and Ethereum do well, where they would make higher lows, higher highs, while these kind of tokens that had a huge token overhang and so forth make lower lows, lower highs. And like some holders would always get excited because like, yes, they still have waves, right? I mean, like there's still an up wave, but it is smaller than the last one. So it's like it's just a sinking ship that's going lower and lower and lower. And so I mean, that ties into like how we're managing risk and so forth. But overall, that's perhaps the easiest way to build conviction, to just say like, let's call it a spade. Some of these tokens are still trading in the billions when their private market counterparties are trading at 30 million, 50 million. Correct. So somewhere those two will converge.
Yeah, I love that. Going back real quickly on crypto specific news as well this week, Aptos is now live and tradable. Tell me about that.
Yeah.
Let's talk about Aptos.
You know, I think the longer you're in crypto, the more of a cynic you become. Yeah, no, because like look, every single year, I always say there's a flavor of the year. In a bull market, there's a flavor of the week, because we like kind of accelerate timelines. But I remember in 2017, Neo was the Ethereum of China, right? It was like the Ethereum of China. It was like supposed to like become even bigger, right? Billions of dollars. And I think it was at the peak, it was worth billions. Even today, it's worth 500 million. I don't know how. Nobody's using it. And then the next year, 2018, it was EOS, right? EOS was backed by Brock Pierce who at the time. Yeah, I don't think he was anymore, but like, I mean, Brock Pierce at the time had a really strong reputation from like, you know, former chairman of the Bitcoin Foundation, and he was a co-founder of Tezos and so, not Tezos, of Tether and so forth. And then like EOS at some point was getting really, really close to actually flipping Ethereum, except that it was on the launch day. And then from the launch day, it was just down. And then 2019, you had Tezos, right? That got really exciting for a while because they had, you know, normal staking. They called it baking, where like you could stake. There was the first asset that was enabled staking on Coinbase.
Oh, wow.
Very hot at the time, 2019. And then 2020, you had 2020, who was I would say Cardano maybe. Cardano was really hot in 2020. And then 2021, of course, Solana and Luna. And so it's clear that every single year we have an Ethereum killer. Every single year we've got like the new hot blockchain that's going to change everything.
Yep.
And here's the thing. You can make money with them if you momentum trade them. But if you look in the rearview mirror, there's been virtually none that have been able to capture and keep market share from Ethereum. And so what I've been noticing is that like I think there will be, or at least there's a chance that there will be great momentum trade opportunities in the Aptos ecosystem. Might be the Aptos token, might be the ecosystem. But, and here's the big qualifier, I see a lot of overlap between the Solana VC community and the Aptos VC community. And so on one hand, I mean, there's really two trades here. I mean, on one hand, I could see this being bearish for Solana because like a lot of the dev community, a lot of the backing will flow from these like, look, we made our money in Solana, off we go to Aptos, right? And then on the second time, it's like just monitoring the Aptos ecosystem, see like who's going to be the first DEX, who's going to be the first NFT marketplace, and so forth, and just playing those. But here's the caveat. Aptos launched at at least right now, it's trading at a $7.5 billion valuation.
Wow.
Right? So it's literally the network just launched and it's worth $7.5 billion, right? And then to put that in contrast, Solana is worth about $10 billion. And so I'm like, you're literally almost at Solana level. So what's the upside here?
Yeah.
Right. So to me, and then, you know, Aptos came under fire because I think something to the tune of 80% of all the tokens are owned by VCs and the team, right? So highly centralized. They got under fire real quick for like pretty much like, it's going to be a dump fest where like retail is going to buy at 7.5 billion market cap and VCs are going to take their profit all the way down. Except of course there's still a lockup. So it's going to be for another 12-month lockup. Yeah. So right now, neither long nor short, because like, look, I've seen this too many times. Like Steppen is a great example where, you know, Steppen launched, I think at 10 cents and got pumped to all the way $4. Wow. Like even like in the bear market, like this was like in April, I think. Yeah. So while the market crashed, Steppen put on like a 400x. And now, of course, it's collapsing. But I always trust that teams that are able to raise money and launch tokens at such wildly asinine valuations, they also have the intellect and marketing capabilities to create hype around it and make this thing do crazy things, right? And so it is fully possible that the Aptos team or whatever, or community, I don't want to blame anybody, but like that they might be able to motivate market makers and marketers and whatnot to make this thing go to $50 billion. But I'm just not going to bet on it because like even 7 to 50 is just, for the possibility of it, not worth it. And so cynical, but at the same time, I'm open-minded. I'm studying the ecosystem. I'm paying attention to it. If something interesting launches, happy to back it, happy to trade it. And here's the thing too, you can always revisit projects because these are long market cycles. Yeah. You might have kicked yourself when Solana was at $200 and said, man, I miss Solana. Well, good news. It's back to $28. Yeah. And so like there's always second chances. There's always something in crypto, oftentimes third chances. Yeah. But I think, again, protecting your downside, it matters a lot more than capturing the upside. There's a lot of ways to capture upside, but there's a really easy way for you to lose 90% plus on Aptos right now. Oh, yeah. And so rather not.
Interesting. Definitely we'll keep that on the radar for the future as well too. And that's one to monitor. Awesome. So I think that kind of covers everything that we wanted to talk about on the liquid side. Moving over to private markets, Meta had their Meta Connect day last week. And so I'm curious, how is this metaverse community and ecosystem shaping up right now? And what does Meta, if anything at all, have to do with it on the angles that we're also playing?
Yeah, I'm saying it's funny because like, look, it's no secret that like I'm very judgmental of both Meta as a company and Mark Zuckerberg. Like you'll probably find at least half a dozen podcasts of me, talking shit about Mark. You will probably find
what do you really think about Mark?
Yeah, or like, and you'll find videos like as old as like 5 years old from me saying that Facebook is corrupt and like it censors and it's a big brother. So like I'm definitely not a fan of theirs, but I will give them credit where credit is due. And I think the XR community it's a very tight-knit small community where I feel like everybody knows each other, and that's something I learned already in the first 8 months of Hartmann Metaverse Ventures, where so many of our founders have crossed paths just naturally in this business.
Sure.
But they kind of lacked organization and coordination, right? And like I think crypto has like on crypto Twitter and there's conferences and so forth. And of course, exchange listings also create some kind of like, validation and structures that just lacks if you all have private markets, right? Because like with crypto, if there's public tokens, there's Facebook groups on these tokens, there's now Telegram groups on these tokens, right? But like people don't make Discord groups or Telegram groups for private held companies. It just doesn't happen, right? And so what I liked about MetaConnect and how Meta did it is that it was almost like a state of the union for XR and the metaverse, right? But really metaverse from that XR angle. And it brought together and it like highlighted some of the best companies in that space and showing like, look, and this is where I think sucked it way better this year than last year. Last year was all about meta. It's like, look what we did. Here's Horizon, this and this and this.
Yeah.
This year, they hardly talked about themselves. I mean, they did a small pitch of the Oculus Quest Pro.
Yeah.
And, I think one of their meetings apps or whatever. But everything else was like ecosystem companies. It's like, for example, like 2 of ours. Like DressX got highlighted when he talked about the new avatar store on like digital fashion.
Yeah.
And then ShapesXR, one of our news portfolio companies, also got highlighted for how Logitech was using them to build entire virtual worlds.
Yeah.
Right. Wow. And so seeing, Meta kind of bring together all these founders from all the angles, showing like, look, this is what's happening in like, fitness in XR. This is how people are like building new technology in XR. Here's digital fashion XR. Here, like, social experiences. Like that is important because I think most people do not know what the current state of that segment is.
Yeah.
They just tried VR many years ago and they're like, it sucks. Now they see, wow, all this stuff is live. All this stuff actually works. And I'll give one more credit to them is that, they do give out a lot of grants, right? And a lot of those grants are actually no strings attached. They're like, hey, we believe what you're building is really cool, and I think it supports the ecosystem. Here's $1 million.
Wow.
Right? They don't want any equity. They don't want any like board seats. They don't want to say like you have to be exclusive to the Oculus headset. No.
Yeah.
They're open-minded. And so
fueling innovation.
Right. And so I think I watched, it's like it's a 1.5 hour like keynote, but the keynotes really record almost as an experiential video.
Yeah.
And I watched the whole thing. I was like really in awe thinking, wow, the XR ecosystem, the metaverse ecosystem is growing and catching form. Where like, hey, these are the top 3 players in this segment. That's like in this segment.
Yeah.
They're live products, real users, and they even talk about how much money some of these apps made. Right? They said like, hey, this game in the first 2 days of launching made $10 million.
Yeah.
What that signals to game developers out there saying like, hey, XR is not just like a what's it called? A hobbyist little thing that like you do because you geek out about. No, like this is a real business too, where it makes sense for you to invest and build out these, build out XR experiences. Yeah. And so overall, very, very happy with how that turned out. Of course, also super excited to see 2 of our own, right? ShapesXR and DressX.
Yeah. I was just about to ask. So for those that don't know, tell us about ShapesXR. What is ShapesXR? What do they do? Why do we back them? Yeah.
So Shapes, we just finalized the deal last week. We did spend quite a bit of time in our due diligence process. Want to close it for Q2, but had to finish some final like verification calls. And so Shapes is essentially the Figma for XR, right? People tend to know Figma. It just got acquired for $20 billion by Adobe.
Wow.
Which essentially allows you to create wireframes of apps now. Okay. But that's only 2D, right? And so people realize like building mixed reality experiences on desktop is there's a lot of friction. It's counterintuitive because like you're trying to build something that's spatial on a 2D screen. So what Shapes does is that you can actually build mixed reality experiences within virtual reality. So you put on your Oculus headset and now you can create the full virtual reality apps, like fully like the complete wireframes, but then also like import them to Unity where you have a finished app without needing any code. And so that's super important. And talking about traction, they have close to 200,000 users already.
Wow.
And Meta developers spend, I believe, 16 hours a week using ShapesXR.
Wow.
And Logitech uses it too. And so it definitely has that it definitely is the market leader right now.
Yeah.
It already has a lot of traction. They only launched the app in November of last year, so those are really strong numbers for such a time span.
Absolutely.
And we're excited to join the latest round, and perhaps I know we're preparing like a little trailer. If it's ready in time, we'll overlay it here so people can get a quick glimpse for 30 seconds.
ShapesXR, a collaborative creation app on Quest.
Great for creative work that's best done in a shared space.
It's a whole new kind of creative tool.
This is where VR just lets you do things that aren't even possible on a 2D screen.
It's amazing what's already being done.
I believe you'll also have a chance to try it out because Meta is doing in 300 stores across the world, doing promotional booths for the new Oculus Quest Pro headset. And it's actually ShapesXR that is the demo product where people can like experience like what is it like using Oculus Quest Pro, and they will use ShapesXR inside of it. So if there's like a Best Buy or something next to you, just check out if Meta has one of those booths and you can try ShapesXR.
We love that. We love that. And so that wasn't the only project that we backed in Q3 though. There was one more.
Yep.
It's called Neurable. I'm gonna ask the same question. What is Neurable? For those that don't know, what is Neurable and why do we back it?
Right. So from the very day one in our deck, I said we had this one category called access points, which are the technologies that make the metaverse more immersive.
Yeah.
And I, especially with a venture fund where you have like 5 to 10 years of like for things to play out, like I don't care that much about like what's hot today on Twitter. I care more about like what does the future look like 5 years from now, 10 years from now. And one thing that to me is very clear is that brain computer interfaces will play a huge role in VR and in the metaverse. Why? Because right now people think VR always has to be like on your feet, running around, doing everything. But also like there is like seated VR and so forth. But beyond that, due to spatial constrictions, I mean, I even write, I write novels, and my book Dawn of Man talks about like VR, like metaverse already exists, right? And most people access it literally with their thoughts, right? And that's what brain computer interfaces, BCIs, do, right? BCIs allow you to control technology with just your brainwave, with just your thoughts.
Wow.
And so we were looking for that space. Initially, I thought like that's probably going to be like a year 3 investment, because I thought technology would take longer. But we came across Neurable and realized, wow, like they're already really far along that path where they started 10 years ago. It was a project from within the University of Michigan, and it spun out to become a full-on company because of like what they had. And so like initially it was like a whole net that would go over your head, right? So important, these are non-invasive, no injections, no needles, nothing, right? Initially it was a net, then it became like a hat, then it became like a VR headset, and now it's just headphones like these, like literally the size of these. And you and I demoed it, right? We were in New York trying it out, and they have a couple cool demos already, right? And so the one we did essentially, you can explain.
We raised and lowered a bar of light only using our thoughts. So essentially the bar starts at 0. We think about it, we think about it, we think about it some more. And the harder we think about it, the higher that bar gets.
And you distract yourself even for a second and it starts dropping based on the level of focus you have. It's like that's one simple application. But then there's also other demos where, for example, you can actually control items in VR using your thoughts. So like they had a really cool demo, and like I think they have a video of that as well. We can link that below. Or if you go on YouTube and search Neurable, they have a couple videos. One of them was like you had to pretty much escape a prison just with your thoughts, right? So for example, you see like, let's say you see the key down there, and you look at it, you focus on the key comes towards you, right? Or there's like 6 different items. You focus on exactly one, and it comes to you. And they even have done like contextual programming. So like, and that's where like the beyond being a cool gadget is that the real scale here is that like what they're collecting the biggest database and library of brain data, where now they can start programming contextually, where you say, for example, hey, 1,000 people think the word play, and 1,000 people think the word stop or pause, right? And then they start having like contextual data on like what does a thought look like? And so they had a demo too where you could make like you could play, pause, and forward your Spotify just by thinking of it. Right. And so
insane.
People think it's like 10 years out, but like it's already getting much, much closer. And so, that really exciting round led by Teal. So we're in good partners there. HTC also involved, so very excited about that one. And
that's an exciting one. How did you find that?
How do we find that? I think Daniel was in charge. Daniel sourced both Shapes and Neurable. So props.
Shout out Daniel.
Shout out Daniel.
Shout out Daniel. Awesome. That's great. And so anything else to touch about with Neurable?
Apparently next year they're going to market. So, keep an eye out. I think Mass Dynamics is the one producing them. So like, there will be really nice, high quality headphones looking just like these that you can buy. And the initial product, right? Because, and this is kind of what I like to like, the VR stuff like is a little bit more far out, right? Like being able to fully contextually control everything. Yeah, that might take another 2 or 3 years. And the problem with a lot of these, I was talking to Adam Draper yesterday, and I asked him like, what's the biggest commonality between like founders that didn't make it, since like him and I both love to invest like very sci-fi futuristic stuff, right? And he said it's tinkerers versus the guys and girls, the lead founders that want to take over the world.
Oh, wow.
Right? And so it's like if you just nerd out about BCIs, but you have no business model, you're just not going to make it. You're going to run out of money because it's going to take way longer than you can stay funded, right?
Yeah.
But so what I like about Neurable is that they have very much a close to a ready-to-market kind of product where the first iteration of it is a focus app, more or less, right? So like we live in a world of like remote work where we all by ourselves in our homes, just working. And so what it helps you do is like it says like, hey, like for example, maybe you get a notification, your focus score has dropped down to like a 40, go take a break, right? And so they're doing it as a subscription model, like $5 a month, like barely anything. Yeah. And then they also make money from like selling the headphones, although they don't want to be in the hardware space. They license that out to someone else to do. And so, there's both a near-term goal with like which is capturing that market, and that funds the really cool futuristic sci-fi stuff that's happening in the background that will then be the real business, let's say 3 years from now, 4 years from now.
I love that. So that's amazing. And I know that one of the things that we had talked about last time is you've taken this new angle to the Metaverse Fund. You've learned a lot in your first almost 11 months now. And so we had looked at kind of what were some of the things that you've learned along the way, but we really like looked back at the last 11 months and what you've looked to invest in and what you've thought about like the Metaverse as a whole, right? So what's next? Like now looking forward, now looking into the future, like not even for just like the next 11 months, but like what's next for the Metaverse?
Yeah. So I told my team, because I think we kind of wrapped. So I think in the last year I said like, year one was essentially capturing the blue oceans within XR.
Yep.
I think we kind of nailed that at this point. We've got the market leader in digital fashion with DressX. We've got the market leader in like, dev tooling with ShapesXR. We got the market leader in like virtual concerts with Red Pill. And the list goes on. What I'm now interested in is really two different angles. And I think the one I mentioned before, which was like connecting the metaverse to Web3. So like tooling that enables like easy integration of DAOs into XR, integrating NFTs into XR, integrating DeFi into XR, because then you can create these really self-sovereign virtual worlds that govern themselves DAOs. They have flush economies with DeFi and have actual traceable goods. Because the problem is right now, like those two are really disjointed worlds. Like you've got NFTs, but it's like you've got NFTs for the sake of NFTs. Like most NFTs aren't actually integrated into real games. Most NFTs aren't actually really integrated into virtual worlds and experiences. So that connective tissue, I want to see happen, and if it also has a strong business model, get funded. And then the second aspect, which I think is really exciting, over the last 12 months, 18 months or so, you've seen more and more the rise of AI too, right? And so funny enough, because I'm such a nerd about this stuff, like I was one of the first beta users of OpenAI, where like I remember one time I took the final chapter of my book, but I left the last 3 sentences out, and I made OpenAI essentially like finish the book for me, and I did this like 3 or 4 times. It was just wildly incredible, the endings it wrote for me, where I'm like, this is like conceptually accurate, like even the tone, the vibe, and everything.
What?
Yeah, I can show you later. Like we can take any part of the book and like have it write like the next.
So you wrote the entire book except the last 3 sentences.
Well, the book was finished and published already, right?
Well,
but out of curiosity, I was like, I went to the document that I had. I was like, copy and pasted everything, but like I wanted to like leave the last 2.
And it just wrote.
It wrote me an new ending.
Finished it for you.
Yeah.
How many times did you do it?
I did it like 5 times, and like because every time was different.
All 5 times were completely different.
Yeah, mostly different. Yeah.
Wow.
Yeah, but like they read it well. I'm like, fuck, like I could have written that. You know? Yeah, and
was it anything like wild off the charts, or were they all like pretty normal endings to the book?
So this is what I like, and I also did this with like the beginning of chapter 2, right? And like I guess my text gave enough context because like it's like a medieval city in the future or whatever, and the way it continued writing, right? It maintained the medieval context where like, he walked out and he heard the blacksmith and stuff like that. I'm like, he didn't say like the bus drove up or something like that,
Sure.
But it wasn't that much. Let's say I gave it 3 pages of context and it created a whole page that matched that context, right? And so that was impressive. But to bring it back, I've seen the progression of AI. I mean, OpenAI was a huge step forward, especially when they launched.
What year did you do all that in?
That was GPT-3. I think the beta was, I don't know, misquoted, but it might, my demo was enabled either in 2020 or early, we're talking like March 2021. So somewhere in that time frame. So I would say
almost been 2 years.
Summer 2020 to March 2021, sometime in that time frame.
Wow.
Because I do believe I was still in Los Angeles at the time. And so that was GPT-3. Now, since then, we had a new product come out called DALL-E, which allows you to, procedurally generate. So that's something else. To generate like images with AI by providing text. So, for example, say,
you and I both
an alien.
both did the demo on this.
Yeah.
We created a Tom Hanks head that was like made of cheese.
Right.
And we typed it in like that, something like totally far-fetched that hopefully there's no Google images of already out there.
Yeah.
And it drew us like 10 different versions of a Tom Hanks head with all his different forms, all made of different kinds of cheese.
Yeah.
Yeah.
So that started emerging, right? So we've gone from text to images, and now what's happening too is like it's not just images, now it's also being animated, right?
Yeah.
And so my mind thought forward, and I thought, how cool would it be, and also how efficient would it be that if I'm a game developer, right? Let's say I want to make Dark Age the video game, right? Instead of me now creating all the little houses myself, what if I just plug in the novel and it creates the world for me, right? Or make it even less that I say, maybe I'm a game developer. I say, you know what? I want to create a city that has like, that's it, Game of Thrones vibes, but maybe a little bit more like Roman architecture and maybe inspirations from, Into the Blank, like something else, right?
Yeah.
So like you can like combine these three styles, but takes place in the future. So I mean, there's like futuristic artifacts, right?
Yeah.
And now AI will literally generate an entire virtual world for you.
Wow.
And why is it cool? I mean, it does, I would say, 2 or 3 things. Like one, scalable.
Yeah.
Right? You can create infinite worlds that are infinitely unique and so forth.
Yeah.
And then also number 2, it's adaptive, right? Where like if you have a world run on AI, like for example, like if you play a video game, like I grew up playing Gothic, for example, as a German game, and the world always looked the same. Like the trees were always in the same location. You never saw a tree grow somewhere else, right? And then like kind of almost programmatically, the sunrise, sunsets, and like it rains also but it's always the same, right? Now, if you integrate AI into this, right, the world then, so this is that's what the word I said earlier, like that's like procedural generative AI, where the world adapts over time, right? So every single time you put on your hats and you go there, it looks a little bit different, just like our world. It changes. Like it's not predictable. Like it might rain, it might storm, but it's still accurate with the context. So, for example, in Florida, every once in a while there's a hurricane. Sure. It's not every time at the same day, but like sometimes they're strong, sometimes they're weak. It's every time a little different. It hits a different coast every time, right?
Yeah.
Now, if you live in, I might get this wrong. Let's say Kansas, there probably aren't hurricanes, right? Or like I live in California. In California, we didn't have hurricanes. We had earthquakes.
I can confirm there are no hurricanes in Kansas.
Oh, yeah. But so, in LA, we have earthquakes, right? But no hurricanes, and vice versa. And so, that kind of thing can start happening when you combine AI with VR. And then I was on a morning run, so before I nerd out too much here, but like I was on a morning run, I was listening to Nirvana, I'm an old soul, and I was like, man, wouldn't it be cool? What if you combined generative like AI with VR, where there was a podcast episode, a fake podcast episode between Joe Rogan and Steve Jobs.
Oh yeah,
like
I
a
saw this.
20-minute episode of like Joe Rogan interviewing Steve Jobs, just using all the historical videos that they have.
It was unreal. Yeah.
And like the beginning was a little rough, but then later on, like Steve talks about what was it, like Hinduism and religion. I was like, wow, like I was like, I'm learning stuff. Like, wait a second, this is like literally fake.
Yeah.
Right.
Oh yeah, and it sounded like they could have been literally sitting across from each other in real life in the room.
Right. And so going back to the example I was running, I was like, whoa, what if you feed all the historical performance of Nirvana, for example, into an AI, combine it with a Red Pill VR, and all of a sudden you could have concert stages of Nirvana performing live, but unlike a recording, it's not always going to be the same.
Wow.
Maybe sometimes they mess up a chord. Maybe the choice of songs they're going to do. Maybe the intonation of his voice is going to be different. Maybe one time he sings it acoustic, one time he does it like hardcore, right?
Yeah.
And like, wow.
Yeah.
Like first of all, like
the realm of possibilities.
It's crazy what's possible.
Yeah.
But then what makes it even better is that it is so close to being real.
Yeah.
And so to bring it all back, what am I looking for? I said, look, for the next 6 months or so, like we're doing a deep dive into AI, how as it relates to the metaverse.
Yeah.
Like how can AI be utilized by developing teams and so forth to create worlds?
Yeah.
Create content, could be quests, could be NPCs. I mean, NPCs and AI. That's a dangerous world we start getting into. Just from the perspective that you might be in a virtual reality and you think you're surrounded by 20 other people, but those 20 other people are actually AIs in games, right? There's NPCs, non-player characters,
Right.
and generally they're programmed to say the same thing. There's always the funny memes with like Skyrim where like it's like like how, like you need something, like, but they always say the same words, right? Because like some developer had to type in like what they say.
Sure.
Now with AI, they can say something completely nerdy.
Oh, yeah.
They can hold political beliefs. They can like everything.
They can act like they're human.
Yeah. And so anyway, that's a huge world of possibility, huge blue ocean that I think was a money pit for many of the past years. But now we're getting to the point where they're actually close to production, close to generating revenue, and so forth. And so something we're studying, looking towards, and hopefully finding some really awesome teams to allocate to.
That's awesome. And so just stay with me here for a second and follow me with this. So you launched a crypto hedge fund because you saw crypto as a next wave of innovative technology. You launched a metaverse venture fund because you saw the metaverse as another next wave of innovative technology. So here's the billion-dollar question. Would you ever consider launching an AI fund with that realm of possibility in the future?
Yeah, for sure. 100%. I mean, it's, the whole thesis behind Hartmann Capital has always been, being a frontier tech investment firm, backing technologies that I both equally believe in, meaning that they're going to revolutionize the world and ideally be net positive for humanity, but also present massive, financial opportunities. Because ultimately that's why people give us money. But what's important when it comes to these very sci-fi feeling technologies is that timing. Because you could have backed. So one of the scariest reads I've ever done. So I always tell people, like, I grew up like reading Ray Kurzweil. He's like one of the futurists of the world. And in 2018, I picked up a book again called The Age of Spiritual Machines. It's a pretty quick read. And in there, and the book was, I think, written in the 90s. In there, he talks about AI winter in, I think, 1987. And like I got cold shivers because like this is the crypto bear market. I'm like, fuck. AI has been a bear market for 30 years. What if I'm in a crypto bear market for like the next 30 years? Like that makes you. So you could have invested in AI in the 80s and you were way too early. You could have invested into VR in 2015 when there's like a little high bull run. You would have been too early. So timing is probably the most important aspect when it comes to futuristic trends. If you get timing right, you get incredible low valuations with very near-term massive upside.
Correct.
Which we still saw with crypto and maybe even social media giants who could have backed Facebook in, I think it was like 2004, 2005 at, let's say a 10 million valuation. And 5 years later, they IPO'd at $1 billion valuation, right? And so I always keep my eyes and ears open. And so, crypto, very, very, very bullish, also ready for the near term. I think Metaverse hit that turning point last year where we're finally ready for that massive growth over a 5-year span. AI is slowly getting there, but like I'm only testing the waters, with Metaverse applications. I think there's going to be more, but I think that's actually the best application for it right at this moment because AI really functions currently for content generation. And that's where Metaverse fits in. There's other sectors that I find interesting that personally invest in, like space and so forth. But the thing that I found compelling about space personally was that the cost of rockets has gone down tremendously. The ability to re-land items from space and so forth. The reusability brings down costs significantly, allowing more scale. But I would say we're still a couple of more years out. And so that's probably a fund we'll launch maybe, let's say, 3 years from now. So keeping my eyes peeled for AI and space, that's probably like the next fund. But right now it's all Metaverse. That's where the eyes are, the focus is. But yeah, you'll see a lot more from us.
That's a really cool way to look at the future, and that's a really cool way to look at what's next for the metaverse as well too. I think that's a spin on it that not many VCs and even not many metaverse VCs are even looking at this thing right now. And so actually just
just to say one more thing, it's when it comes to investment funds, there's this term called mandate, right? Like you have a mandate where you say like, hey, this is what you invest in, and you don't go outside of it. And I think it's important for asset managers to actually have vision before they start a fund and know like what is it that things will look like, should look like, that they're interested in, and still provide themselves enough flexibility to be true to the vision versus the mechanics, right? And so, for example, like one of the decisions I made when I started the Metaverse Fund is that I said, I came from the crypto angle and it was very easy to fall down the hole and say, we only do tokens. right? And I'm glad I didn't, because I said, look, let me be thematically focused in the metaverse. Metaverse only, metaverse only, metaverse only. But it is okay if I hold tokens or equity or NFTs, right? Because we don't know yet. Like if the biggest metaverse company, like for example, one of the most important metaverse companies, so to say, right now is OpenSea.
Yeah.
OpenSea does not have a token yet, right? And so like the most important NFT marketplace, you like in any investor, any crypto fund that said, oh, can't invest in you, don't have a token, you missed out on the most important NFT infrastructure.
100%.
Right? And so that's kind of the angle that I take. And OpenSea may one day launch a token, maybe it will IPO. OpenSea could IPO and still be the currently the most important NFT infrastructure piece. And so that's the way I always like look at it, structure it. And that's why, for example, like is Neurable a token? No, it's a PCI, but it's an important building block towards making the metaverse happen, right? The AI technology, people might say, oh, but AI is not crypto. I'm like, yeah, but this is such an important piece. Like, again, the bigger picture is metaverse, 3 buckets: infrastructure, access points, and content, right?
Yeah.
Content, right? Yeah, you can buy individual IP and like you can back individual game studios, or you can also back the AI infrastructure that will enable content at scale, right? And so that's kind of like the mental framework I generally take, that I don't like, put myself too much in a corner, a pigeonhole, that I stay like thematically focused to a vision. That's my main mandate. But the mechanics of how we arrive there is a little bit more flexible.
No, it's awesome. That's what sets you apart from the competition. And I actually got a chance to see that competition and I guess hear their pitch live this week. So I was in New York this week for the Ideas conference by CoinDesk, great conference. And I heard from another Metaverse VC, and she only looks to back the Metaverse from the angle of types of projects like Sandbox or Decentraland or buying virtual real estate, and only wants to look at like the 2D type like open world model of this is the Metaverse. And one of the things that she actually started out her speech with was that VR is both expensive and clunky. And it was really hard for me not to do that Big Short moment where, he shoots his hand,
Mark Baum stands up.
His hand up in the air while he's giving the speech. Wrong. So, but no, I mean, and that's like the way that you set yourself up differently from the competition, is you look to back this from a lot of other angles than what was just previously like the crypto look. So with that, tell us about what the team has been up to. I know I was at Ideas. I'll maybe touch upon that in a little bit of some of the other takeaways that I took from the conference. But what else has the Hartmann Capital team been up to the last few weeks? Yeah.
This has actually been a pretty big travel week for the team while I was manning the desk,
Good to stay here.
We had Daniel attend AWE. In Lisbon, there's a big XR conference. I think he's still there right now. So usually he's in Dubai. He visited that. So, and then Jonas from Germany, he attended a conference I think it's called the Crypto Ask Conference in Frankfurt. And so it's kind of nice, since we have a local base with, a few of us here, but we also have this remote footprint where, we can have somebody in Lisbon at one time, somebody in Frankfurt, and somebody in New York all in the same week, 100%. All making connections in different geographies, meeting founders, meeting, allocators too, in your case, And so that's been really cool. I know I talked with all of them this morning doing IC. I know Jonas shared that, it's Germany. So Germany's a little bit more, conservative. So like, a lot of the conversation in Frankfurt was about, for example, like tokenizing real assets, right? So like the European market cares about, let's say, putting real estate on blockchain, commodities on the blockchain, stocks on the blockchain, and so forth. And then on Daniel's front, he did say it was unfortunately maybe like 50-60% hardware heavy, but then there was also, a number of, actually like XR startups, like tech behind it and so forth. And there was also some, content on, the Web3 integrations and so forth. So overall, it's just always good like that, we can all learn and expand also network when it's not just me.
Oh, 100%, of course. And I thought some of the big things from the Ideas conference were everybody that I talked to, I asked them like, oh, of course, like, what do you think of the conference so far? But one of the questions that I asked them was, why did you come? And what did you want to get out of this? And I made it like very, of course, simply put, I gave my response first is I wanted to go to network and to make introductions for our fund with the best people that were attending. And that was successful. I did that. But the number one response that I got from everybody else was they wanted to see what the sentiment was from institutional investors. And it was really interesting. It was like a mix across the board, but it was some stuff that we touched upon like in the last war room and where, 60% cash, 80% cash, I'm sitting on my hands. But it was funny because also institutional investors now have been watching the crypto space for the last 5 or 6 years. And I heard that a retirement pension fund is actually thinking about yield farming and DeFi now in this flat market where they just can't seem to pick up a bid anywhere. And so it's really interesting. I know, and like the reason I say this is because we started the first part of this conversation with SBF and with what it takes for, you know, more regulation, for more of these players to get in the space. But the real takeaway is that there's not a right answer, and the institutional sentiment across the board, of course, like in this time, yes, is bearish because the entire market's bearish, but they're willing to kind of try anything now.
Yeah. And, you know, I think it also helps that crypto didn't significantly underperform the market at large, right? I mean, you could ARK Invest, right? Cathie Woods is down worse than most crypto assets, right? And Cathie Woods is essentially like an index bet on tech stocks, right? It's like most tech stocks are down horrendously, right? And heck, even currencies are down 30% and so forth, you know? And so I think people understand that in a global macro environment like this, virtually everything has very similar downsides, but not all the upside is created equally. And it's like my mental framework is really kind of like the general downside is the same, the upside is different, and then the only risk management aspect that you do need to take into consideration, and that's where it's like to me, risk management, like downside is binary, upside is a scale. Downside is binary from the perspective a token or company can still go bankrupt. They can still go out of business, right? But if they can stay in business, right, the amount of drawdown will likely be fairly similar. But the amount of upside is a complete open scale, right? They could stay the same level. They could go up 20x. They could go up 1x. They could go up 1,000x, right? And so kind of what I aim to maximize for, both within the fund and my personal net worth, like with all my investments, is say, how can I maximize for the kind of companies that lean heaviest towards the binary outcome of one, staying alive, staying in business, meaning they're well funded and they have a path to revenue, but with the maximum amount of potential upside. And so, you know, Ethereum, like that's why, like I'm so crazy bullish Ethereum, because I'm saying, look, this is a decentralized network that is running, that has the most amount of traction out there in general. Right now, I think if we put it in dollar terms, annualized profits, $5.5 billion. Ethereum currently makes $5.5 billion a year, right? And none of that, right, go towards like the Ethereum Foundation or anything. Like they could stop today, essentially, right? And Ethereum makes $5.5 billion, right? And this isn't a bear market. This is when, you know, gas fees are crazy low, and you know, and so basically I'm saying, like, okay, look, he's a tech that works, that has traction, that has $5.5 billion in annualized profits, not revenue, profits. But the upside also is if we say, like, hey, let's say macro gets fixed, global macros, like the world returns, you know, and the digitalization continues, you know, we're not going to go back to the dark ages, then yes, more and more things will go on chain. That 5.5 billion at that point might be 55 billion, right? And so if it's 55 billion, then no, Ethereum will not stay at 100 billion market cap, right? At that point, it could be you add a zero, right? If you add a zero to the profits, maybe you add a zero to the market cap. And so, you know, again, looking at this mental framework, 0 to 1, like, is Ethereum going to die? I don't think so, right? Is it possible? I mean, okay, let's assign it a 1% chance, right? Will it stay alive? Probably. And then upside wise, you know, how much upside is left in, you know, let's say, you know, an Amazon or an Apple, right? Like Buffett, for example, has like most of the portfolio in Apple, right? But, you know, at the market cap that Apple is, there's only so many multiples left, right?
And already so many people have an iPhone in their hands.
Right. I mean, yeah, right. Like the kind of like the binary outcome here is that there's a more variability to less people having MacBooks or iPhones than more people having them, right? Ethereum, it's the exact opposite. Like, it's awesome that we have 30 million or so MetaMask wallets installed now, but what is 30 million compared to 7 billion people, right? And so the
100%.
The upside is massive there. And so again, that's my general mental framework comes to all of these, and why, you know, when it comes to being bullish, like, I am bullish Ethereum, I am bullish crypto as a whole sector. And, you know, everybody manages their risk their own way. You know, I think the best way to approach crypto is to look at position sizing, right? If you see risks that there's another big drawdown coming, if you believe that crypto is maybe too volatile for you, if you think crypto is too volatile by a factor of 10x, well then put 10% of what you want to put in, right? And all of a sudden now you can manually manage that volatility.
Right. No, that's amazing. That's awesome. And then just a few last pieces. on bullish team news as well as bullish market feelings. You got invited to be a speaker, juror, finalist for the Metaverse Awards.
Yeah, so for the Metaverse Awards, they reached out to us, and in March there will be the American Metaverse Awards.
Nice.
And so they reached out to us for me to be the keynote speaker. So I'll be doing the keynote speech. We're also, helping them, I guess introducing to the right people in the industry, because I told them, like, look, the most important thing when it comes to, and by the way, there's zero financial going either way. I'm not paying them, they're not paying us anything. They simply reached out because they liked what we're doing in the metaverse, since we've backed a lot of like great companies. Yeah. And then so I told them the most important thing you can do is, like, number one, not make it pay to play, like only nominate people that deserve it. And then two, find the right people. So for example, find me, maybe talk to other, fund managers, talk to other founders and say, like, who are the people you respect the most, so you can really have an amazing curated group of people that are actually shifting this industry, right? And so first cool news was that, giving a keynote there. Yeah. And then secondly, it's the University of Miami also reached out to us, giving a talk there, I think on November 16th. Nice. And so I'm teaching the students at UM about both, I think, crypto and metaverse. I guess I still get to decide my topic, but still cool to see, universities embrace the space more. Oh, yeah. And us becoming more and more of like the flagship name for the metaverse, right? I mean, I did make the conscious decision to not make it generalist fund. I said, like, I think the metaverse is the big opportunity. Let's focus on the metaverse. And so we're seeing more and more, whether it's a Metaverse Awards or university reaching out to us. That's been awesome to see, rewarding for sure. But then also, universities providing more education on the subject. I had a really funny moment. This is maybe a funny anecdote for the end. In 2019, I did a road trip, a roadshow, whatever you want to call it, in Europe, where I was talking with all the big banks. Like, I sat down, I believe at the time, either the head of portfolio management, the CIO from Commerzbank. I sat down with the old China, with the partner of Deutsche Bank, and like all these guys. And I also met with politicians. So I had a great sit down in the office of today's finance minister of Germany, Christian Lindner. Oh, wow. We met, and then also I had a meeting at the Department for Digitalization of both Germany and Austria. Yeah. And so the reference I want to make here is that I had a ministry, that's all. Yeah, so the Ministry of Digitalization. So I had a meeting with a lady from the Ministry of Digitalization. Yeah. And they were setting up like a council, And I was like, I should probably be on there, whatever, Yeah. And she's like, oh yeah. So like, what are your credentials? Because Europeans love credentials. And so she's like, do you have a university degree in blockchain? I'm like, ma'am, there are no courses in blockchain. And like, but if you're curious, at that same trip, I did 3 lectures to German universities. Yeah. And so I was like a 24-year-old kid lecturing at 3 different universities on Bitcoin. But so the cool thing is that, that was a novelty. Like I had because, I was a very niche influencer in Germany for crypto, like I had universities reach out to me and like we facilitated that, right? Yeah. And also shout out my team that helped me back then, Mario, Manuel, Sebastian. But today, I think it's become very normalized that I would say a top university that does not provide programming or courses. I mean, would be like a full-time credit or like just like events and stuff like that for crypto and blockchain and metaverse. Like they will no longer be seen as like a leading university because like it's like now it's part of it, right? And so that is amazing to see. I think particularly for people that have been in this industry for, let's say, more than 4 years, because we know what it looked like, like you were laughed out of rooms, all kinds of rooms, whether it's like, politically meets like, oh, you're crypto and a nice little like money laundering thing, or like, the finance guys are like, oh, way too volatile, nobody will touch it, Right. And so it's awesome. And so definitely like, appreciate the University of Miami reaching out to us. And I'll definitely make sure that in both those instances, we really give back because, I think all the innovation in this industry has come from, not all of them, I mean, but a lot of the innovation in the industry has come from young people that have had, unmodeled mental frameworks. And what I mean with that is that, like, if you've been living in a certain system for long enough, then you believe that system is the truth and it can only be that way. I think a lot of young people, and that comes up with downsides too, a lot of young people, they say, hey, I challenge the way things are and here's a new way we can approach it, And that naivete can lead to innovation. It can also lead to you fall on your face. And I think we've seen both, right? We've seen some of the biggest innovation come from crypto. We've also seen people like kind of reinvent the wheel saying like, wow, we just realized why you cannot pay a 200% APY, without some kind of internal economic problems. Yeah. And so anyway, it's definitely appreciate today's session. We covered a lot here from, the regulatory angle, the kind of like shorts that are going on, Aptos, MetaConnect, some of our portfolio companies and what the team's been up to, but
one more full week, the month of October, then we're into a new month. halfway through, almost halfway through Q4. But yeah, anything to finish the month out next for next week?
For next week, no, I think bear markets are great to put your head down and do the studying you don't get to do in bull markets.
Yeah.
Because like in bull markets, it's so fast paced. You don't even get to do any research. You're just like, here's a momentum trade, here's a narrative, like we got to jump on it, bum 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 bum.
Yeah.
Now I feel like it's a consolidation in more ways than one, where it's time for you to deep research on individual projects and find your winners that you actually put some like intellectual and physical energy and effort behind.
Yeah.
Last war room we talked about Sushi Swap, right? We made that bet. I had a call Tuesday, Wednesday with Avi from Golden Tree where we kind of consolidate efforts. Today I had a call with Jared, the new head chef, to like learn a little bit more about like what he's building and so forth.
Yep.
And so, that kind of work where like in the bull market is so fast paced. Now I'm like, hey, let me get to know my founders. Hey, let me get to know what the teams are working on. Let me study AI for a bit, because like I don't need to deploy all the money right now. I can deploy 6 months from now, but like it's important to kind of like stay out of the curve so that, when the next bull market comes, you've got all your infrastructure in place, all your knowledge in place, and your team is ready to take that war on.
Yes. I love that. That's a great way to end.
There we go. With that, see you guys next time.